What's up traders, and welcome back to the channel. Today we've got a high probability swing trade setup on Triple M, which is also known as the 3M company, that I'm looking to take advantage of this week. While the market has been choppy, Triple M has been showing insane relative strength, and in this video we're going to cover fundamental catalysts which are driving the stock higher, technical setups with key EMAs and price levels, and a trade plan with entries, stop losses, and price targets. You won't want to miss this, so hit that like button and subscribe for more daily stock insights. Let's dive right in. First of all, let's begin with the fundamental breakdown. Why Triple M? Well, it has been in the spotlight for a few key reasons. To start off now, we've had a strong earnings. The latest earnings report surprised the market, beating the expectations with strong cost-cutting efforts and improved profit margins. Reason number 2 is that it is a dividend powerhouse. The stock is yielding 5.5%, making it a great defensive play as inflation cools down. As well, reason number 3 is that we have had legal overhangs resolved. The company has settled key lawsuits, removing major uncertainty that held the stock back. Reason number 4 is that we've seen restructuring and growth. The spinoff of their healthcare business is unlocking their massive shareholder value, and industrial stocks have been gaining traction with the recent infrastructure spending. Triple M isn't just holding up better in the market, but it's thriving while the market struggles. That is what we love to see when we pick strong stocks for swing trades. Now, moving on to the most important aspect of this, the trade setup. So if we pull up the chart on a daily, we see the following. We are above the 50 EMA on the chart, as you guys can see, and we are above the 200 EMA, showing bullish momentum and that the buyers are controlling the stock. Now, something important to note is if we plot in swing high anchored VWAP, so basically if we track the average price in which the sellers came at that high, they're actually losing money because the average short was and entered the position at around $149.21. Right? But we closed today at 153. So those shorts that entered are losing money. The average short participant is losing money in the market. So in this case, the buyers know this and they try and defend the levels. We've seen them defend it. We've seen it. We've seen it here, right? We go below the 50, but then we bounce up. Go below the 50 and we bounce up. We're finding key areas of support here at the 50, which is amazing to see. Now, another important aspect of this, and something else to notice, is that if we plot an anchored VWAP from the earnings of the stock, let's get that in, right? Let's change that to a green color. We see that from the earnings, the average market participant who entered is winning money as well, right? It's 149, the same price. So the people who've been long the name are now making money, and it is more reasonable that they will defend their levels of entry, right? So I believe that this stock will have further upside. We decided on price targets of 164 and 178 for the stock. I'd be looking to enter at approximately at the level of 155 with the stop loss below the 140. Share size is up to your risk and percentage, basically your parameters. You can also do this and play this with options. What you can do is set a long call option at 154 and then set it out to expire over a month and let that move. We have to see the stock actually have that move. What I'm saying that right now, it's looking like a 9 to 10 setup. But what we want to see is continued strength. So something like this, right? We have another candle and a candle that makes this high. Like that. That would be a continuation, show that, hey, okay, we came back down, we found buyers at the 50, and then we bounced off from it. And these are the price targets, 149, 164, and 178, right? What we don't want to see And that's why it's very important to let time is our best asset here to help filter it out. We don't want to see this and be a long trap and just consolidate again at this price and then actually fail the 50, which is what we wouldn't want to see. We don't want to see buyers failing to hold their levels. That would be just astronomically, very bad for the stock. So those are key levels that I'll be looking out for on the stock. And like I said, I'll repeat it. You can play the strategy at around 153, long call, and set it out for expiration a month or 2 months, but only after we see the following conditions that I've previously mentioned. We want to see that clear bounce and show that the low has been formed, right? And the reason as to why the stock is also very important is if you look at this on a daily and compare it to, let's say, the S&P 500, the SPY, we've seen nothing but downside movement, and we failed the 50, showing that there is more weakness in the overall market, right, compared to Triple M. Isn't that amazing to see? And Triple M, it looks like as if the market declines hasn't affected it at all. So this is a highly profitable and most likely a 9 out of 10 setup. We now got to see the conditions satisfy, but it would be a setup that would pretty much guarantee the upside movement towards those levels. Like I said, of 164 and 178. Like I said, take your own risk, manage your trades, and as always, don't let the market whip you out.